Welcome to a special interview from Security Token Academy. Hey everybody, I'm Adam Chapnick, and we here at the Security Token Academy are bringing you a special corporate member interview from our remote home studios. Today, I'll be speaking with the one and only Dan Doney, co-founder and CEO of Securian C. Securian C, of course, is a platform allowing issuers to construct offerings, define terms, KYC, AML, potential investors, and of course, tokenize securities. Securities is also a gold corporate member of the Security Token Academy. Welcome, Dan. Good to be speaking with you again.
Thanks, Adam. I appreciate it. Always a pleasure to speak.
Always. So, as you know, as we all know, it's tough time for the financial markets and everybody because of this coronavirus. How is Securirency doing? How have you guys fared during this time?
This has actually been, personally, we've had one of our employees' wives was affected by this. We've been, unfortunately, my family's been unscathed. As a company, we're a global company already. We work remote as teams, so we haven't been affected in a significant way. I'm spending a lot less time in New York, and certainly not traveling a lot, which means I'm focused a lot more on delivery. And so it's really not been a substantial impact to us. And in many ways, it is the justification for security tokens. So a lot of the uncertainty and the cracks that we see in the market are the very reason why companies, the Security Token Academy exists, and companies like ours are so excited about the future, because we have the tools to do this better. And so that in that way, it's providing a tailwind for us. Yeah,
it's really, obviously no one's celebrating what's going on. It's a horror in so many ways to so many people. But from a from a strictly sort of macro level for this industry, it really is showing a lot of the use cases that would be improved by having this really ramp up for everybody. Obviously, Securirency is a huge part of that globally already, like you said. So you guys have some interesting news, and there's a specific kind of operation and a participation, let's call it, that you guys are taking part in, and that's around ETFs. For people who might not be that fluent in terminology and acronyms, what's an ETF and how does it compare to a mutual fund? And then once we define that, we'll get into some more meaty stuff.
Yeah, actually, one of the shining stars in the whole volatility in the market has been exchange traded funds. So they are, what an exchange traded fund is a fund that is an asset that contains other assets that trades on public exchanges, the New York Stock Exchange or NASDAQ. They represent, so if you buy shares of an exchange traded fund, what you're actually getting is ownership rights of a bunch of shares of other things. So a simple example, one of the earliest exchange traded funds was a SPDR fund. So now, instead of having to invest, SPDR being the S&P 500, a fund that represented the S&P 500. So instead of having to go and buy shares in each company in the S&P 500, you buy one share or the shares of the fund, and in turn, the fund is managing all of those underlying shares. So it's simple. You can get much broader exposures by purchasing these funds, and that's beneficial because you don't want your future to be based on the fact that one particular company or another company had a good day or a bad day or stumbled over something or is particularly affected by COVID, for example. Right. You want to invest in a sector, and so it gives you risk diversification. Now, what's exciting about ETFs, exchange traded funds, is they have displaced, or they are rapidly displacing, mutual funds. So mutual funds have been around for some time. There are places where you could get the same sort of exposure to an industry. You'd have emerging market funds that you can invest in. But ETFs are a wrapper, a way of getting to those underlying assets that's much more efficient than mutual funds, efficient in several ways. First, with the mutual fund, I'm really only daily at the liquid at the daily level. So as if I want to buy shares of a particular mutual fund, at the end of the day, I place my order and the next day it's fulfilled. And so I have to wait. And this actually happened. I did an interview right in the middle of COVID, and really when the news was hitting that this was a big deal. And as you know, the markets had collapsed. I called the bottom. I thought, okay, this is a time to move capital into the market on a day in which it was spiking up. Now, I got lucky. This isn't investment advice at all in terms of whether to get in or not. But because of the mutual fund in my retirement fund, could not wait to place that order, did not place the order until the end of the day. I lost 8% on that entire investment as the market went up that day. Right. And that's substantial in terms of the impact on my ability to retire. And whereas with an ETF, that order clear, when I call the broker, I place that order, it's instant. Now, there are other substantial advantages that are really important in terms of tax advantages and other components as well. But what you see is a better wrapper. Mm-hmm. Now, our investors, and in fact, our partner in this, WisdomTree, was one of the pioneers in this space in terms of exchange-traded funds. And what they saw, they came in as an indexing service, they saw that ETFs would displace the mutual fund industry. And so they've made their mark, and they're the largest independent asset manager in the ETF space on the advantages that ETFs have on mutual funds. But they came to realize that tokenized mutual funds may in fact displace ETFs.
Okay, so that's a good segue there for us here at the Security Token Academy. So exactly. For those who are riveted by what you're describing, now it sounds like you're going to the juicy part, which is how we're, okay, so we get that everybody can understand that the ETFs have these advantages over the mutual fund. What is it that the security token brings to an ETF that's better than even, let's say, an individual asset token, or on the other hand, better than a non-token ownership share of an ETF? Yes.
So the WisdomTree spent a lot of time and due diligence looking across the various solutions in the space as they were looking into, okay, we believe that this market may in fact disrupt the exchange traded fund space, but as a institutional brand, they needed compliance tools. So their desire was to move from an asset that's traded here in the US and US markets, or as they have a European presence in Europe on European markets, to an asset that could trade globally. So they wanted broader distribution. Of course, broader distribution, more investors, being able to reach global markets, which is the power of blockchain, because it is a global technology, gives them more assets under management, but it requires compliance tools that know the securities regulations of, say, Singapore or the Australian market or the UAE, et cetera. And that's the tools, as we've discussed in prior discussions, that Securian really specializes in, is the ability to make smart tokens. That is, tokens that know what they are allowed to do and know the regulation of the various jurisdictions, and therefore can move in efficient transactions between those markets. So that's one benefit, immediate benefit to WisdomTree, as we will be moving these funds out into global markets. The second benefit of blockchain is just smart contracts. So ultimately, the long benefit here is the ability to automate back office functions associated with asset management. So we've recently submitted a patent pending, on automated asset management strategies in the space. And we'll go into, there's a lot of detail to the way this works, but you can imagine funds that manage themselves and produce the information so that you can really drive down the cost of fund management. And that's key in across all of the market, in the funds world, in mutual fund world, and the exchange traded fund world, is the fee compression is tremendous in those industries right now. Why? Investors demand more efficient assets. They don't want money to go to overhead. They want it to go to producing value. So what they want is very efficient fund processing, and smart contracts actually create the channel for it.
Amazing. That makes perfect sense. So you guys have been known, or at least to those of us who follow you, sort of the word that comes to mind for me, at least when I think of you and Securirency, is sort of the interoperability, and so the ways that you guys were able to crack that nut. Are you focusing, you said you have a patent pending on fund management, was it strategy, automated fund management strategies? Is that what you said? Are you shifting some of your focus into that as a specialty?
It's actually assets. Generally, it's asset management.
Asset management. Sorry about that. Yes.
One class of assets are funds, and so you can imagine self-reporting funds, where harkening back to the 2008 challenge, 2008 problem. So what happened? Our last global financial collapse happened in 2008. What was the issue there? Well, largely it was these mortgage-backed securities portfolios or funds. And in these funds, you'd have tens of thousands of mortgages, in residential mortgages, for example, wrapped up in a fund structure. And what happened was those portfolios began to underperform. Individual loans were not performing as was expected, and no one had transparency into those underlying assets.
Right.
So you couldn't see that they were underperforming. If you've seen The Big Short, you know the story. Mm-hmm. When everyone realized that these were underperforming, it became difficult to price what exactly do we own? What is the price of all of this? And what you saw is banks, financial institutions around the world had on their balance sheet these things that no one knew what they were worth, which means then we don't know what that bank is worth. And that caused a problem with liquidity broadly. Here's how this fixes that problem. We now have the ability to have an asset, a mortgage, for example. There's a DeFi implication. We do self-processing mortgages. So imagine this, I make my payment directly to the mortgage. Using a QR code, I'm making the payments. It's actually processing then that mortgage payment. We have full transparency, thanks to the power of the blockchain, as to that payment. We also have a great record as to what the present value of that loan is. Now I take and plug that in to another asset that owns it, and that happens to have 10,000 other things like this, where I now have full transparency and the ability to drill through that fund into these individual assets and report on this overall structure. And every transaction of buying and selling the mortgages in and out is fully transparent. And all of those processes are audited. So you now have real-time assets that actually very directly solve the problems of 2008.
Yeah, it does. It's fascinating. It sounds so simple, and yet it's so fundamental and revolutionary. So that's how, I mean, that's clearly how the blockchain process helps the asset management industry, the ETF industry, that kind of drill down transparency, that it gives you there's a nimbleness that can come from that. How does the tokenization of ETFs help the blockchain and security token industries, do you think?
Yeah, great. So the big, fantastic question. The big challenge in the blockchain space so far, our promise, we talked in 2018 about the promise of liquidity coming to these markets, and yet it has not materialized in any substantial way. And there's a reason for that. And we think these assets will change this. The first is folks are focusing on the tokenization of individual assets, specifically in real estate, has been probably the largest focus in the security token market. The problem with that is those assets are hard to price. And so in other words, if I expect active trading of a hotel somewhere or a piece of property in Manhattan to occur, if I'm going to go and place a buy or sell order on that piece of property, I better know I'm not the last guy to know that they've just discovered mold in the property, or that somehow something has just gone on and wow, the price is going down, I just didn't know, or the price is going up for this or that. It's hard to price an individual asset. Whereas in a fund, what you're actually betting on, first you have diversified assets, so the individual performance of a particular property no longer becomes so important, but also you're betting on the curator, that is the asset manager. or the fund manager, because you look at their performance. How have they done over time? Are they picking the right assets? What kind of ROI are they producing? And it's their job to actually manage those individual assets. The reason why mutual funds and exchange traded funds have become a popular investment offering for mom and pop, because they don't want to be the expert who's picking every winner here and there. So funds are important. And now here's the second benefit. They're very easy to price. So these funds, WisdomTree's funds, trade and have very strong pricing indicators already on the New York Stock Exchange, on NASDAQ. So I don't have to question what those assets are trading at right now. I know exactly the price. I know the price in a very deep market. So a tokenized version of the same fund, the exact same assets, I know exactly what it's worth. That creates the conditions by which you can have active trading. So you need a baseline for institutional value. So imagine you want to come in, you've got $50 million worth of retirement income. You want to move into the blockchain space so that you can buy and sell a bunch of assets on a security token exchange, for example. Where do you park your money? Do you park your money in Bitcoin, where that $50 million could go up and down considerably? And remember, your purpose is there for good, strong investment thesis, not to ride the risk of a particular asset. Now, you may want to go long in Bitcoin as an individual thesis, but that's not the stepping off point to invest in other things.
Right.
Now, imagine, for example, WisdomTree Treasury Fund. This is, a stable, highly liquid instrument that is strongly priced and produces a very nice dividend. So you're now an institutional investor, you park your money in this token from which you can trade for other tokens. And that gives you a place by which you can enter a security token market and park and then make markets. Institutions haven't had that. So they don't have a place to park. That means they can't then trade. So there's no easy way to get in and out of the other assets. This creates the foundation on which liquidity occurs. And the market hasn't had that. And if you don't have that foundation, you will never get the liquidity that we want industry-wide. So this is a very big step for the security token space broadly.
Yeah, that's well explained, because liquidity has long been sort of the holy grail promised to everybody for the answer to why should we care if people don't understand or aren't already into this whole thing as an exciting prospect. The simple answer has always been liquidity, and then the frustrating fact has been it's taken a long time to manifest. But that's a great explanation, I think, for the average guy to understand how, okay, now ETFs are sort of the pathway to it. So this is good news for the security token sub-industry, I think, the way you've described it. I think to add to that, there's the one other part, I guess, is the elusive user experience fear for the mom and pop investor that I think, the industry as a whole is starting to wrap their head around and address, which is exciting. That how does the average retirement age guy or woman is just immediately put off by even the words security token, don't understand it, won't do it. And then when they're introduced to the idea of wallets and these new exchanges with names they don't know or other ways of interacting, the risk is perceived as too high. And so I think, though, we're starting to see all kinds of ways, definitely Securirency has been and remains one of the leaders of addressing all these things. So personally, as a guy who watches this probably too closely, this is exciting. But you've mentioned WisdomTree a bunch of times. Can you talk a little bit about what's your relationship with them exactly and how you perceive that proceeding?
Yes, so they were our lead investor in our Series A rounds, and
Mazel tov.
Thank you. And they brought with them a number of other prominent VCs, RRE. We've got some sovereign investment as well, and we're excited about all of our cap table. WisdomTree, of course, is they're a real intellectual leader in their space. So their CEO, John O. Steinberg, their strategy officer, Will Peck, they really have just fantastic intuition. So it's really been a pleasure for us to work with them because they see where all of this is going. Now, they're also, it's good to have a partner who's eager to move. because the exchange traded fund space and the fee compression generally across the marketplace has created an imperative to create new markets, to create new opportunities. And so they're really driving change within the space. But as I mentioned, John Steinberg early on saw where the whole ETF market, when it was a tiny little market, it's now a $5 trillion market, and it's expected by 2030 to be a $50 trillion market. Whereas mutual funds are rapidly declining in terms of assets under management, ETFs are exploding. And now this next generation actually creates the conditions for global assets. So as an institutional partner for us in the security token space, when you walk into conversations with Bank of America or with State Street or with KKR, you know, you have a certain amount of credibility and you might have a clever message, but when you walk in with wisdom, you know, folks who are rich, premier asset managers, it's a different kind of conversation. So it's opening doors for us broadly into these circles where we think there's the biggest impact and also the most value.
That's exciting. Well, Dan Doney, co-founder, CEO at Securirency, thanks so much for chatting with me again today. We always wish you, the entire team at Securirency, the best of luck.
Thanks, Adam. It's always great to chat with you. Thanks for leading.
We're doing what we can. You can find more information on Securirency by going to our website, securitytokenacademy.com. Click the membership tab and select corporate member. For everyone here at Security Token Academy, I'm Adam Chapnick. Thanks so much for watching and stay sanitized.